The IMF slashed its growth forecast for SA along with almost every other country, and that's in response to the unprecedented tariff announcements by the US and some of its trading partners. Its latest World Economic Outlook shows that South Africa's expected growth rate has been pegged at 1% for this year. That's 0.5 percentage points lower than January's outlook. The IMF says its downward revision reflects slowing momentum from a weaker than expected 2024 outturn and deteriorating sentiment due to heightened uncertainty. It's also pointed to the intensification of protectionist policies and a deeper slowdown in major economies. More detail on SA is expected in the IMF's Sub-Saharan Africa report, which is due out on Friday. SAA has submitted a 5-year, 2-phase corporate turnaround plan to government. This could see the carrier go to market for a 2.25 billion rand investment facility and seek out a strategic equity partner. The plan also details how SAA intends to overhaul its governance structure by creating a 3-tier entity. This will result in there being a group holding company and under it a property firm, an aircraft asset management company, and the airline itself. SAA says it also wants to finalize its divestiture from low-cost subsidiary Mango. The corporate plan gives no indication that the airline will rely on government funding in the future. South African motor companies say they will start to feel the full force of US President Donald Trump's 25% automotive import tariffs from July. That's after export orders have been fulfilled. But the industry is still hopeful that government can persuade the US to mitigate some of the effects by then. Last year, South Africa exported vehicles worth about 35 billion rand to the US, a near 30% volume increase on the previous year. The main exporters were BMW SA and Mercedes-Benz SA. ArcelorMittal SA has raised concern that the government's proposed carbon tax increases will hinder its turnaround strategy. The struggling steel major paid 125 million rand in carbon taxes last year. That was at a rate of 236 rand per ton of carbon dioxide equivalent emissions. The rate is set to jump to 308 rand per ton next year. The group further criticized the proposal to reduce tax-free allowances and use more carbon offsets, saying there is a shortage of eligible offsets and those that do come to the market are often priced at levels higher than the effective tax rate. AMSA SA says the local steel industry is not equipped to decarbonize at the rate policies are being implemented. The composite leading business cycle indicator dipped 0.2% on a monthly basis in February. That's from an upwardly revised 1% rise in the previous month. The downturn was driven by decreases in 7 of the 10 available component time series, which outweighed increases in 2 components, while 1 remained unchanged. The largest negative contributors were a decline in the number of residential building plans approved and a deceleration in the 6-month smooth growth rate in the number of new passenger vehicles sold.